Good morning, good afternoon, good evening, wherever you're located on planet Earth. It's time for the PulseWave Report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Report. And we're going to take a look at a few things here. Let me go ahead and get some things pulled up. Just one second. All right, so hopefully everyone had a great weekend. Hopefully you're ready to get down and dirty with these markets. I don't expect anything to happen this week, especially not until at least Wednesday. This is a FOMC week. FOMC will be putting out the information on Wednesday around 2 p.m. Eastern Standard New York time. And so the markets are going to probably be very tame between now and then. So far this morning, we have very quiet markets. Like nothing is triggering, nothing's going short, nothing's rallying. I don't see any plays on the table whatsoever. It's just a really weird market, with the exception of the crypto space, of course. But as far as US equity market, forex, things like that, I just don't see a lot going on right now. So the question is, what is one to do? Well, see, that's why I'm in the lab the way I'm in the lab. I'm in the lab for a reason, because I'm trying to figure out exactly what is about to transpire so my people can be on the forefront of it. Well, one thing that I'm noticing is that we got to talk about these grains, man. All right, this is traditionally basically limit up sessions we keep seeing. Beans are up 14 and 3/4 points now at 1554 and a half. Corn is up 21 and a quarter points at 676 and 3/4. And wheat is up 27 and a quarter at 737 and a half. This is a problem. All right. You heard me say before, this is a problem. Something's going on. All right. And we have to stand up and take notice, because there's about to be some sticker shock at a grocery store near you. So we can't just, pretend like we don't see this, pretend like we don't know what's up, pretend like we don't know what time it is, pretend like you don't see these prices, like you don't see nothing happening, like you're not privy to the market. Even if you are not actively trading or investing or involved or engaged in any form of market speculation whatsoever, you will still be affected by what is happening in said markets. I don't buy stocks, I don't trade stocks. Well, you're still going to be affected by what's happening in stocks, whether you want to be or not. And right now, the futures market is on fire with these grains. The Chicago Board of Trade is having fun right now. These prices are going up, 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 up and away. Volume is upticking, and we have to stand up and take notice and start saying, okay, what's really going on here? And do we need to start participating or doing something? Because something is happening. We just can't pretend it is not. And we don't do that here on this channel. We talk about stuff. We deal with things. No matter how difficult, we go there. All right, we go there. So this morning, I am focusing on what I'm seeing in these grains. I told you last week that if this continued, that we would have to start looking into this and seeing what's going on. So in tonight's chart segment, I will be looking at the grain market charts and taking a look at what's going on and what is the price action saying, and how we may be negatively affected in the supermarket. Because at the end of the day, you have to eat. You don't have to buy stocks. You don't have to, buy crypto, but you do have to buy food. Unless you're growing your own food and you're 100% self-sufficient in that food category, chances are you're like everyone else and you got to go to the store. All right, you got to go to the store. So this is going to affect prices all the way around. All right, it's just what it is. So we have to take notice of this and see what's going on. This is helping the agribusiness for sure. But there's something going on. Markets just don't go up and down for no reason, and they don't run away like we're saying now. There's this runaway grains. I normally do not trade grains because typically they don't really do anything. They don't trend. They're just quiet. They're just chill. They're just very chill markets for the most part. So it's really nothing to see here, unless you're involved in agribusiness in some kind of way, shape, or form. You normally don't really care about what's happening in the grain market. You really don't. It means nothing to you. So we got to take a look. We got to see what kind of developments are really going on. And I will be the first to admit I have been in the lab so heavy that I haven't had time to really catch a lot of news information. And, back in my broker days, I had all types of, live feeds and subscription services, and I knew what was going on. I knew when reports were coming out. I already knew what people thought the consensus was going to be. I had the squawk on the floor, trading floor. I knew what the early call was going to be before the market opened. If they were calling for the grains to be lock limit up or down, I knew that too. I knew all of that. But since the off floor, that's a long time ago. I'm just a regular person now, so I don't have nor need all those different accesses. So I don't have them. So I don't know. I really don't know what's going on and why these markets are moving the way they're moving. I just know that they are. And it would appear that we've been moving or inching toward this for quite some time. And like I said, I have taken notice. All right, I see it. I see you, grain market. I see what's going on here. We are experiencing, okay, so actually the last 3 weeks, we started getting a little bit of hiccupy in the soybeans, maybe because that was contract expiration and rollover. But all in all, we are in a locked-in bull market. So the market is a locked-in bull market. Can't discount that. I did have a little bit of pullback, just a little bit. I don't really see any real follow through here. I'm just looking at my algo spec report, and I saw where something triggered briefly on a pullback, and then that looks to have been the end of it. So it didn't do it again. Now I'm looking in the last 10 trading readouts, and I don't see any significant triggerings at all. That is interesting. All right, so the daily report, basically what we have here, excuse me, since April the 12th, okay, since April the 12th of 2021, soybeans have rallied from 1393 all the way up to 1553 after topping out this morning at 1570. So we went from 1393 to 1570. That is a whopper of a move. And it's looking like we might possibly see some pullback here coming up. So today would not be the day to get long this market. The day to get long this market is on a pullback. So just like I said, looking at where we are per se, that's what I'm seeing right now. That's exactly what I'm seeing. So if you were operating in this space, you don't have an excuse to be short. You just don't. You don't have it. You just don't have it. You don't have the excuse to be short. So I look for stuff like that. You know, I look for the trends and the counter trends. I look at all of that stuff. Excuse me, just because it's healthy to see what trend you are in the market, if you're trending at all. And then you want to see the strength of that trend. If you see the strength of that trend waning, if you see it getting toward a resistance mark, then you have to take note of that. And that's the algo charts. Do they take note of these chinks in the armor? If it looks like the market may be about to take a pause, we have measurements for that. And we take a look and see exactly when, to get an idea when that pullback is going to come, where it's going to occur, and for how long, or the strength of that pullback, and what is the potential for that pullback to turn into a full-blown correction. All right. Now, correction doesn't necessarily mean from the traditional definition of it. So let me be clear. You can get a full-blown correction mode readout without the market technically being in a full-blown corrective state. That's a warning that right now the market is in what is called a particular zone or setup, where if the supports are taken out, this is what you can see occurring, and that's basically what you're looking at. So it's a warning. It's basically a warning. You can almost say it's almost like an alert in and of itself. So we entered a corrective state prior to this run up on April the 12th. Technically speaking, we got the first sign of trouble on March 29th of this year. That's when we got the first corrective signal. The market was the bears had already taken over the market at this point, and the market was just in a pullback status. Even though you still had the complexion of the strong bull market, we had the bears enter the market technically on March the 10th, and they did not let go of their grip until, I want to say, they lost their grip. They gave up control on April the 13th. They technically gave up their control. So it lasted from March into April 13th, end of March to April 13th. And then that's when the bulls said, okay, we'll take over from here. So when you see things like this happen, you do need to take note of it, because it is significant and it cannot just be easily ignored or dismissed. All right, to do that would be a grave mistake. So what we look for is these key resistance notifications. Right now, in soybeans, for example, you're wide open. The top side is wide open. You do not have a current coming into today. There was no key resistance area. We had not had a high from which we had pulled back from. All right, we're still trying to figure out where that high is going to be. All things being equal, if the market were to close right now, then we would actually have that point. You could say we had that point because today we hit that 1570 and a quarter. Depending on where we settle, that 1570 and a quarter could be our short-term high. Okay. All right. Excuse me. So that's what I'm watching for today. Looking at your intraday price inflection points, that's where we are. But the market still is resting good, even on the pullback from the intraday high. Excuse me. On corn, it's a little bit different. We're still right here near the highs of the session for corn, and for wheat, we're still kind of around the same area. We're there, but we've pulled back pretty substantially from the morning high in the beans. So that's why I'm looking at it. Traditionally, we have, as far as order flow and momentum goes, in the futures market, we have the three amigos. The three amigos have similar momentum curves in which they trade from, and I'll get into more specifics than that later. But the three amigos is the E-mini S&P 500, crude oil futures, and soybeans. All right, those are the three amigos, the three twins. All right, they have very similar price action points within the algo charts, where they move almost identical, which means they can be used as day trading vehicles. You can day trade crude oil, you can day trade soybeans, you can day trade the E-mini S&P 500. You have enough volume, liquidity, and volatility in those three assets that you can get in and out with ease and not have to worry about getting jammed up because of illiquidity issues. All right, so they move together. Those are the three amigos in the futures markets from a day trading perspective. You can make an argument nowadays anyway that you can day trade cocoa. I had a client back in the day who was day trading cocoa before it was popular to do so. Cocoa traditionally is one of the thinner markets that you have in futures. But ever since we had that big Ivory Coast coup in the early 2000s, cocoa has been off the chain as far as price. So this is kind of where we are now. So I'm looking at the traditional specs on how these markets move to figure out what's going on now. So as far as what that has to do with the stock market, we'll see that brings us to the next situation that we need to talk about, and we'll get back on the grains later. But as far as the equity market goes, you have a similar situation brewing. You got a little similar undercurrent brewing. Coming into today, you have all of your indices in a good, strong bull market. At one point, the Russell, my hustle, was the weaker sister, okay? But it has since came clawing back. And right now it's maintaining a rather strong bullish aspect. But if we're going to be real, it's only 4 days old. This bullish aspect is only 4 days old. So, today's the fourth trading day. So we can't, I take that back. It's the third trading day. So we can't really say, okay, she's back technically. No, not really. She just got out of the Algo Kumo cloud. She just got out of that cloud on the 25th. So we really can't say that. Or I should say the last trading session would have been Thursday, Friday of last week. So she's not all that right now. She's not all that. And we have to acknowledge that coming into today. So it's way off support, so it's not threatening to break support and just fall away. But we did have almost a 2 week, we had a 2 week situation. In the last 2 weeks, the Russell was the weaker sister, and we did have, kind of substantial pullback. I would say it was significant. We got all the way down to 2201. So yeah, that's pretty substantial. That was a substantial pullback. So we got to 2201, and then just a couple of trading days ago, we broke that support and got down to 2164. Okay, so we've rallied from 2164 on April the 20th to now. So that's only 4 trading sessions ago. You see what I'm saying? So that's a significant rise from the low point of 2161 to where we are now. So yeah, we've had a substantial run off of that pullback. So we did hit a pullback. But here's the weird part. This is where the volatility part comes in that I was telling you about just a few minutes ago when we're looking at the Three Amigos. What you essentially had in the Russell was basically just a volatility spike to the downside. You did not hit official corrective status. Now, I know that's going to come a shock to you, but again, I don't base my stuff off of the charts that your broker supplies to you. I'm basing mine strictly off the algo charts. And like I said, tonight, we're going to go in depth with these charts. I'm going to show you, but I need to talk you through it first. And that's what we're doing now. I'm talking you through it. What happened is we had spots. We had like a 3-day window that occurred from April 31st until the April the 4th. We had that window where we actually got the corrective warning, but then on the following trading session, we relocked right in again. So it never materialized. Key support was never broken when that happened. It was never broken. We did not break key support. So can you really truly say then that that was a correction? No, it was not a correction. It was just a pullback. Pullbacks are retreats from current highs in a bull market. That's it. You're pulling back from the high. A correction, a full-blown correction, is a deeper pullback. It's when you're taking out past supports and past resistance zones on the way down. You're seeing technical damage on the chart. Okay, and that's not what we saw. That is not what we saw. We did not see that. We did not see that. No, we did not. No, sir. No, ma'am. We didn't. We got the warnings, but we didn't get the production. A warning is just that. It's a warning. But we need to see production. We need to see follow through when we get these readings. That's our confirmation. The system gives you the warnings and say, okay, this is what state the market's in. But then you're looking for confirmation. You're looking for key areas of support and resistance to be taken out. If they're not taken out, it doesn't invalidate the signal. That's the wrong word to use. What it means is that it didn't materialize. All right? Doesn't make the signal invalid because the information that we got from the market in the first place was valid, real information, which triggered the warning. All right? Just because you have a tsunami warning doesn't mean that you're going to 100% get a tsunami. It just means you need to be clear that the conditions exist for this tsunami to take place. So you best tread with caution. All right? The fact that the tsunami did not occur does not invalidate the warning. The warning is valid the moment it comes out because the current conditions exist that create tsunamis is in effect. High tide is high tide. That's what it means. It means the tide is high. It's higher than it was. High tide warning. High surf warnings. Same thing. The waves are larger than normal. That's what they're talking. You got wave alerts, okay? And you need to do it. You need to be cautious when you proceed. And that's what we got. So here at PulseWave Trading, we look at the signals. The signals are what they are. All right. Rally alerts, rally alert buy signals is one alert. Crash alert sell signals is another alert. And then we have the trend momentum readouts, which lets us know what type of a market are we dealing with. Is it a bullish trending market, a bearish trending market? Is it a sideways consolidated market? Is it a bull market in correction? Is it a bear market in correction? We look at those things and we measure those. And that's the and those are the readouts. Those are the market conditions. Your trend momentum reading on the PulseWave reports is your market conditions reading. It's letting you know the conditions of the surf. All right, and it ranks it in order of severity. So you know. Those rally buy alerts, those rally alert buy triggers, and those crash alert sell signals are bread and butter of the PulseWave system, because it's letting you know, okay, this is what's happening. This is happening. Not, okay, this may happen. No, this is happening now. And we're waiting now to see if we get that production. That's it. That's what's letting you know this is happening. Okay. Now, outside of the normal daily buying and selling of market participants, we have outside forces also that come into play that have effect and bearing on markets. We call that the news cycle. So is there news that is coming out? Well, the way the market perceives news and information is like this. Everything that can be known, that is already known, is factored into the price. All right? The price is what it is based on current knowledge in that particular market. If anything comes out new that may contradict what is already known, that's when you get shocks to the market. All right? So let's use this week as an example. We're heading into the FOMC on Wednesday. Let's say what is known is that the Fed is not going to do jack. They're not raising rates and they're not lowering rates. We're already practically near zero, so there's no more lowering of the rate. And so the threat is only to the upside, which is them raising rates. And let's say the consensus is they're not going to do it. It's not going to happen, right? So the market is moving accordingly. Today's prices, if you pull up any stock, any forex, any futures contract, any crypto, whatever the current price is right now at this moment is based on existing knowledge. Okay. If when Wednesday comes, the Fed shocks and raises interest rates by, let's say something, let's use something crazy for our analogy. Let's say they raise interest rates by 5 full basis points, something just ridiculous like that, right? That would shock the market. That right there would be the surprise. That's a surprise, because that's information that was not previously known. That's information that has not been previously or currently priced into the market. So if that news were to come out on this Wednesday, breaking news, the Federal Reserve raises interest rates 5 full basis points, the market would absolutely get wrecked. I don't care what asset you're talking about. All asset classes would probably just hit the floor and go right through the floor. You know, they would have to close the markets. They would have to do whatever they had to do, because the panic selling and buying of stuff would just be chaotic. You would hit what is called in trading parlance fast markets. Everything will be in a fast market. Fills are no longer guaranteed. You may or may not be able to get in or out of a market. For those of you who are newer to trading, fast markets are conditions when the order flow is coming at such a rapid pace. There's so many sell orders, there's so many buy orders that it can clog or bog down the system, where the system can't keep up with the amount of volume, the sheer volume that is entering into the market at that moment in time. Now, we've since gone pretty much 100% electronic, but even the servers can be overwhelmed. All right, markets can get overwhelmed. Now, there's still some traditional paper markets out there. When I say paper market, I mean markets. It's pit traded. You got human beings in there, market makers, whatever. When they get overwhelmed, there is no guarantee of price that you get filled at. And technically speaking, all right, because we have theoretical and then we have practical, the real world. The theory is in a fast market, you cannot be guaranteed a price. So if you place a limit order, you may not get a fill at all. If you place a stop, there's no guarantee that you will be filled at or near your stop price. Slippage can be enormous. All right. That's the theory behind a fast market. But in practicality, in the real world, you're not guaranteed a fill at all. You may not get filled at all today. Even if you place a market order, you may not get filled. Now, I know people say that's not true. I'm telling you it's true. I've lived it, been there, done that. All right. It has happened. It can happen. It can happen. All right. You weren't there. I was there when the Globex terminals got jammed up. If you guys don't know what I'm talking about because you wasn't around, you know, back in the in the late 90s, early 2000 and pre 9/11. If you wasn't around pre 9/11, you don't have any idea what I'm talking about. But it was wild, wild west. It was crazy times. And to this day, I'm still waiting on the fill. All right. Still waiting on the fill. All right. So yeah, it can happen. Can those conditions exist and happen again all these years later? Absolutely. We've seen it. Have we not? What happened on May the 6th of 2010? Did we not experience it then? What happened in 2008 into 2009? Did we not experience it then? What happened just last year in March? Did we not experience that again? So yes, it's never gone away. It can happen, and it will happen again. All right, as long as we have markets, it will always happen. It will happen again. The thing is, are you equipped and prepared for the date that does happen? Okay. So are we in that situation? I'm here to tell you that, and I'm not talking, I'm going off script, meaning that I'm not talking about the algo charts from the PulseWave price trigger reports right now. I'm just saying that, remember, we jump to the news cycle, the outward parts that are affecting the price right now in multiple markets. And that is the news cycle that's driving the market. Any shock to the system can create that environment. And right now, the conditions exist that we need to take precautions because a tsunami could come. Now, do I believe that the Fed is going to be the trigger of that said tsunami? No, I don't. But it doesn't mean that they can't be, and it doesn't mean that something else can't happen and come along and spook people and shock markets. All right, we are in the age of the shock jock. Anything can happen. Anything can happen. I'm not trying to frighten anybody. I'm just saying anything can happen. Markets just don't go straight up, and they just don't. And markets just don't go straight down. That's not the nature of markets. What we have been experiencing and getting addicted to is price action and bull markets that have been afflicted and created by money printing. So what you are seeing is artificial markets. It's not organic price action. People aren't just buying because, you know what, I'm bored, I need something to do. So let me go ahead up in here and just go ahead and buy something. Let me buy some Apple. Let me buy some Google. That is not what's happening. Not by a long shot. That is not what is happening. I repeat, that is not what is happening. Okay? We have oodles and oodles of noodles. All right? Oodles of money printing. Decades worth of non-stop federal spending that is beyond out of control. We have something like $100 quadrillion debt load that can implode or explode at any time. And it doesn't take much stress on the system to make this occur. Because of the Fed anomalies and interference and intervention into said markets, we now live under a never-ending daily tsunami alarm. And people have become deaf to it. Every day is a tsunami warning in these markets. Okay? You need to be aware of this. Now, the potential for profit has never been greater because of the Fed intervention into these markets. Because we have controlled markets like never before, we have a problem. The markets have gone from being manipulated to being outright controlled. All right? You need to be aware of that. The markets are controlled. At some point, what goes up must come down. All right? So please be aware of that. Yeah, we've had the mania, we've had the Reddit forums, all right? That's nothing new. Those forums existed back during the Yahoo message boards days. What are you talking about? Trading forums have always existed. It's not going away. And those aren't the problem. The problem is the intervention of the Fed. The Fed's money printing into these markets. They are the ones guilty of fueling all the speculation. Now, don't get it twisted. Without speculation, you have no markets. No speculators, no markets. Say that with me. No speculators, no markets. Speculators are the liquidity of the marketplace. Either the retail specs are adding or taking the role of liquidity agent, or the banks have to do it. You have to have liquidity. Where there's no liquidity, there's no market. Where there's no speculator, there's no market. All right? There's no liquidity. There's no liquidity without the speculator. The speculator is the most important participant in the market. Don't you ever forget that, and don't let the talking heads on television tell you any different. The retail spec is the most important man in the market. If it wasn't for the retail specs buying and selling, there would be no liquidity, and there would be no money on the table to be made, and it wouldn't attract anyone to the markets. People are always attracted, all right, by capital gains. If there's no capital to be gained, then there's no speculators entering the market. If no speculators enter the market, there's no liquidity. You now find yourself with illiquidity. No one is going to own an asset that is illiquid. The only market space where it is allowed and it is tradition is the housing market. All right. Real estate is an illiquid investment, no matter what anybody tells you. And you know that going into it. That's the only exception. That is the only market where you have that exception of illiquidity is real estate. And you don't mind, because traditionally speaking, real estate is a true buy and hold investment. All right. Stocks are not. The buy and hold tradition of stocks was borrowed from the buy and hold tradition of the real estate market. And they used that to bring retail specs into the market. All right. Your great-great-granddaddy was able to buy and hold a piece of stock because back when we were in the industrial age, those companies were going to grow and get bigger, and the price of the stock would go up in value. Plus, A lot of these blue chip stocks were attractive because of their dividends. So well-to-do individuals would buy shares of those stocks because of the income. All right. But these, by tradition, were not illiquid assets, and they were not like real estate. Stocks have never been like real estate. And technically speaking, you were never really meant to buy and hold them forever because companies go out of business. Real estate doesn't go out of business. The brick and mortar can come down and you can build another brick and mortar on top of it. The land is the land. The land isn't going anywhere. All right. So when I say real estate, I'm including land. So land isn't going anywhere. Buildings can be knocked down and you can build another one. But again, real estate is an illiquid asset. It's not easy to move. Take some time. You got to find a buyer. All right. It's not like that with trading. Trading is people setting at machines, hitting the buy and sell button. Okay. So we have liquidity. Some instruments have less liquidity than others because people are not attracted to that particular instrument. They're ETFs that are highly illiquid versus your cubes or your spiders. All right. Cubes, I'm talking about the QQQ. Spiders, I'm talking about the SPY. All right. Which tracks the S&P 500. All right. So you got your TLT, which is the bonds, your SPY for S&P 500, QQQ for the NASDAQ 100, okay, DIA, your diamonds for the Dow, and your IWM for the Russell, okay? Those aren't going anywhere. Everybody and their mother is long or short those markets at any given time, all right? And in the energy sector, we got OIH, USO, UCO, and then we got, did I say XLE? Okay. So those aren't going anywhere. And Dig and Dug, of course, too. Those aren't going anywhere. Everybody and their mother is going to be in and out of those securities. You got liquidity anytime you need it. All right. GLD, SLV, also widely held. You don't have to worry about liquidity. No matter what shock comes or news to those instruments, you always be able to get out, get in and out of the market. You don't have to panic. But barring all of that, the stage has been set that we live under a daily tsunami warning, and you need to be aware of this going into it. If anything reminds us of the past and makes us nostalgic of the past, it would have to be Bitcoin. The way Bitcoin moves is similar to the beginnings of the Globex system. For people who wanted to trade the E-mini S&P 500 and the E-mini NASDAQ, it was the wild, wild west. Sometimes Globex would go down, couldn't handle all the order flow. They have long since worked all those kinks out, and the thing is virtually, flawless today. But back then in the early days, it was the wild, wild west. Okay, that still exists though. We've seen it in the markets as a whole. So you have to be aware that what goes up does come down, and this unprecedented bull market in multiple asset classes is being fueled primarily by the Fed. So it's artificial. It's not organic. All right. It's not like, hey, everyone likes to eat Oscar Mayer. So guess what? Oscar Mayer stock is on fire because more and more people are eating hot dogs and they just love Oscar Mayer hot dogs. Wow. Or Hebrew National. Hebrew National the stock is going ridiculously high. Everybody and their mother's just eating Hebrew National Franks. No, this is not organic, folks. This is field federal speculation. They're guilty of this. In the 2008 financial crisis, they did the same thing. They created the housing bubble. The Federal Reserve is a bubble master. They create bubbles. If they're not creating a bubble in the equity market, they're creating a bubble in real estate. If they're not creating a bubble in real estate, then they're back to creating bubbles in the equity market. They're forever creating bubbles. We are a bubble economy. All right? This is a bubble economy. Guess what happens if the bubble ever stops? If the Fed ever stops creating bubbles? The economy grinds to a halt and goes into full-blown collapse. They don't have a choice. This thing was designed with this flaw in mind. You need to understand that. This is the Fed's design. The central bank's design. This is their system. They designed it this way so that they can control the masses, control the nations. If you control the money, you control the nation. Always remember that. Our nation doesn't even print its own money anymore. We have a private corporation called the Federal Reserve to do that for us. But it comes at a price. The price is for every dollar that they print, we owe them $1 in interest. So 100% interest attached to every dollar that's printed. And our ignorant government agreed to it a very long time ago before any of us were born. That's right. That's why they have the Federal Reserve Act. It's nothing federal about it. It's no different than if today Amazon said, you know what? We need an Amazon Act. And they create the Amazon Act. But you know, they'll be smart. They're called the Federal Act. Really, it's the Amazon Act. That says that whatever they want to say. The last time we had corporate America write their own laws into existence was under Obama, when he single-handedly allowed the healthcare industrial complex to write its own laws and mandates, and they did it under the guise of giving you free healthcare. There's no such thing as free anything. The most expensive things in life are free. It's only until you get involved in it that you realize just how expensive it really is. First time I ever heard a person say that was my man, Reggie Middleton, who I never met personally. And he's right. There's no such thing as free. There's no free lunch. You need to understand that. All right? At some point, the bill is always due. You ever been to those all-you-can-eat restaurants where they let you sit there as long as you want? You can sit there all day, gorging yourself on food. But at some point, the bill is due. At some point, enough will be enough and you'll have to leave. All right? That's what's happening here. Where are people flying to? Well, you got to follow the money. Today, the equity market is barely positive, but Bitcoin futures composite index is up almost 3,000, and you got the grain market on fire. Almost lock limit up from back in the day standards. All right, so that's where the money's going. What about the US dollar? The US dollar is barely holding to the strong dollar policy. Remember what I taught you guys a while back. If you don't remember, I'll bring you to your remembrance. In order for the White House strong dollar policy to remain in play and in force, the US dollar index cannot fall below 90. It has to be above 90. If it drops below 90, guess what? No more strong dollar policy. That goes out the window. Now you're under a weak dollar. If the dollar goes and drops to 88, that's when the tsunami bells start ringing. You cannot have the US dollar drop to 88. And you darn sure can't have it close below 88. When that happens, you go immediately into DEFCON 5. You go into DEFCON 5. DEFCON 5 exists between 88 and 77. You drop back down to 77, now we're talking about World War III, and you can't have that. Can't have that. We're talking austerity. We're talking whatever. You can't have that. So mark my words, the day the US dollar falls below 77, you might as well go ahead and just start packing it in. Because the war is about to break out. World War III is coming. You can't have it. You cannot have it. That is the danger zone. 88 to 77, DEFCON 5, tsunami is hitting the shores. All right, surfers are drowning. All right, red alert. It's a slippery slope once you drop out of a strong dollar White House policy. Now, the White House has retained a strong dollar policy for quite some time. All right, and that's been helping the U.S. dollar to be maintaining its world reserve currency status, but that's slipping due to the introduction of the blockchain and digital assets. Other countries are already ahead of the U.S. and having a national digital dollar. They have a digital currency now. So it's threatening to dethrone the US dollar as the world reserve currency. That's one of the things that's been keeping the US as a superpower. All right. It's not just its military might, but the fact that all trade and commerce had to be conducted with the US dollar. Once that's no longer the paradigm, the US goes into free fall and quietly bows out stage left from being a world superpower and goes into being a failed state at that point. We're already seeing the signs of that with lawlessness being promoted in the world, in the United States. Lawlessness is being promoted and heralded. All right. We have criminals being heralded as heroes, dead criminals being heralded as heroes that young people are looking up to. Did you ever think that in 1,000 years you would ever see and live to see the day where criminals, convicted criminals, dead convicted criminals will be heralded as people to look up to, as role models, as heroes? Something to think about. We're so far down the slope, you don't even realize it. You don't realize just how far down the road we have found ourselves. As a country, this is where the U.S. has found itself. So, of course, you would have fractured markets to go along with it. Would you not? Is it far-fetched? I don't think so. I don't think it's far-fetched. Not at all. Not at all. How do you figure that? It's not far-fetched at all. We are here, ladies and gentlemen. You ever been to the zoo? And when you first get to the main entrance of the zoo, there's like this little map, and it says "You are here." And you want to figure out, how do I get to the elephant exhibit? How do I get to the reptile house? How do I get to the monkey cages? And it says "You are here," and you have those little paw print things on the ground. You have the bird prints leading you to the bird houses, and you got the little, like, you may have a snake or something leading you up to the reptile house, and the big elephant feet leading you to to where the elephants are. You know what I'm talking about. Well, we got road signs here too. We got road signs here too. And we have to acknowledge it. We have to acknowledge where the nation is. So I don't know how long or how much longer the central banks can put up facade. I don't know. If I had to, roll the dice, and I would have to go back to my documentary I did. There is no collapse. I would have to go there, and then go to my second one, the Fed versus the blockchain, the central banks versus the Bitcoin. I would have to go there and say, okay, that's what I think is going to happen. And I don't really think a lot has been done to change that opinion or alter that opinion. I think that's what we're seeing here. And I think the markets are starting to reflect this reality. The grain markets are not rampaging for no reason. There's something going on. There's something going on, and we have to stand up and take notice. Even if we don't know what that something is, we know something is going on. Inflation is starting to show up in food and energy. We can't deny that that is a reality that we are seeing. It's happening. Whether we like it or not is a different story, but it is happening in front of us. It's happening. Where do you go from here? I don't know. But we do have road signs, and we do have early alert warnings. And right now, the early alert warnings are saying we're living under the days of daily nonstop tsunami warnings, and we'll be wise to heed them. If you just take a cursory glance at just the news cycle, okay, such as Goldman Sachs now turning bearish on the stock market. But then right next to that, you got JP Morgan launching a Bitcoin fund for their rich clients after they've been bashing it for years. You see what I'm saying? They say one thing, but they do another. Okay? They do another. You got to think about this. Okay? Or how about this? How is it that copper futures are hitting a 10-year high amid supply constraints and infrastructure plans? What do you mean supply constraints? Ladies and gentlemen, what you are seeing is the unintended consequences, or maybe this was the intention all along. You're starting to see supply glitches. Remember I warned you about that? I said we're starting to see supply issues. You can only mask a supply chain disruption for so long. All you got to do is go to the store and look for certain items. And if you don't see those items for a very long time, there's a reason for it. They're not playing keep away from you because they don't like you. Oh, here comes Jonathan. Hurry up. Hide the toilet paper. No. They don't have any. Now you can argue and say, well, that's because people are buying it all up. That hasn't stopped the endless supply before. How many boxes of cereal have you bought in your lifetime? But yet, when you go to the store today, there's still boxes of cereal on the shelf. Supply and demand. When demand is up, so is the price. But then they're going to make sure that they keep that supply on the shelf. Because what company wants to go bankrupt because they couldn't meet demand? What person starts a company without first dreaming of demand? And you start to build out accordingly. No one goes into business saying, you know what? We're never going to make money. We're never going to have any demand for our product. So let's just do it halfway. No one does that. If you go into business like that, thinking like that, then you're an idiot and you're going to fail. That's the problem that every company wants, is to be like, man, we having a hard time keeping up the supply. The demand is so high. But what do you do if you're a company? You hire more people. You build more factories. You do what you have to do so you can get that paper. Okay, so you only got 10,000 widgets, but you got to order for 1 million widgets that just came in. What are you going to do? You're going to go ahead and you're going to make sure that you can get those. And then right after that, you get an order now for 5 million. What are you going to start doing? You're going to build out and you're going to do what you need to do to meet as much demand as possible. Because that's money on the table. What are you going to do? Walk away from an order for 1 million? I walk away from an order for 5 million, 10 million, 20 million, 100 million? You're just going to walk away? I don't know where I'm out of business. You're not even going to try to meet the demand? No, you're going to meet that demand. You need that paper. Why aren't the store shelves full? Why aren't the store shelves full? Why are we running out of things? I have never heard since ever, since the whole tech boom and the whole internet boom, I've never heard anyone say, well, you know what? I never heard Microsoft say, you know what? We're not gonna be able to get no more Windows out, man, because we just can't get no microchips, man. We just can't find no chips, man. You know, it hasn't rained in 6 months, man, and we need to rain real quick. We need it to rain some microchips, some transistors or whatever, man, so we can build some more computers. Or Apple say, you know what, man? I wish we could make another Mac, but we just can't, and I can't get you no more iPhones. We just can't find no chips, man. It ain't raining chips like it used to, man. Maybe if we do a rain dance, maybe some chips will fall out the sky, but we're just gonna have to go out of business. We just got to hang it up. You really believe that? You don't think after all these years they probably own their own chip manufacturer? Are you kidding? As rich as these big corporations are, you don't think that they thought about that supply chain issue? You think they're going to let their own stock price get hurt because their supplier's having a problem? Nah, they're going to buy the supplier and then they'll build it out and make sure they never have supply issues again. So I don't want to hear, well, there are no more PlayStation 5s and Xboxes because we just don't have microprocessors. We don't have processors. No, so you're just going to go out of business because you're not selling anything? You can't sell enough. You go out of business. Right? If the baker can't sell any more pies and cakes, they go out of business. So they're going to do whatever they got to do to meet the demand for those pies and cakes. If you got lines wrapped around going down the street, wrapped around the building for those pies and cakes, you're going to do what you have to do to meet that demand. You're not just going to lock the doors and say we're out of business. No. You're making so much money, you don't want to stop your money. If you have to, you will go and buy a farm, grow your own wheat so you can have your own flour. You're going to do what you got to do to meet that demand. We're not seeing that, ladies and gentlemen. What we're seeing is excuses. So either this is being manufactured on purpose or something else is in play. Follow the money. Well, if you really want to be technical, companies were being paid not to produce and manufacture. When did that never happen? When did that happen? They just reworded it. It's called a bailout. Anytime money is provided to bail out corporations, that is exactly what is being done. You're paying them to not be productive. Just like you would pay a farmer not to grow corn. Farmer Brown, hi, my name is Fred Government, and I'm here today because you've been growing so much corn and it's really causing a lot of problems. I can't sleep at night. I'm gonna need you to stop producing so much corn. Why would I do that? I'm making money hand over fist. Well, I'm prepared to cut you a check. I'm gonna pay you not to grow corn. So let's say you're making $400,000 a year doing this corn, hustling this corn. Well, I'm gonna pay you $500,000 a year not to grow corn. So you're gonna make an extra $100,000 a year. How about that? That's what the government's doing. The government is paying corporations not to manufacture anything. We'll give you a bailout. Don't worry about it. Just close your doors. Okay. So that goes back to point A. A manufactured crisis that's being done on purpose. How can you say otherwise? Where is your proof that it's not a manufactured situation based on the evidence? Follow the money. Money was paid, taxpayer money was paid out to corporations who kept their doors closed. and didn't manufacture nothing. Now we have a disruption in the distribution chain. The supply chain has been broken. Why? That's all I'm saying. Okay? Are you preparing yourself for the bear market? Don't think it can't happen, because it is going to happen. The day is going to happen when people are going to buy bankrupt companies and the stock price is not going to go up. It's going to go down even harder. Don't pretend like you don't know what I'm saying, because you've seen it. You've seen it before. Just because you're buying doesn't mean everyone else is buying. The day is going to come where that strategy is no longer going to work. All right? Think about it. Think about it. We need to think about it. All right? What they call it, the new normal? Well, you're in the new normal. You are in the normal. Now, let me just say this too. Now, gold and silver for the longest time have been put in a situation where they're not being allowed to prosper. And that's being done by design. And every time, and every so often, we got people come out and say, oh, the CFTC, and, COMEX is about to collapse, and blah, 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 and blah, 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 blah. Like I told you, COMEX will not collapse. It's not going to collapse. The only way that it will collapse is with fraud and malfeasance, because someone on the inside stole money. All right? COMEX can't default because the majority of market participants in the precious metal futures markets are not taking delivery. That is a special circumstance that you have to set up at the time that you create your trading account. And that is a question, are you a hedger? All right, you got to fill out the hedger's paperwork, because people who hedge are people who are going to take delivery. If you are not, then you will never take delivery. Even if you hold a long position going into the last trade day or final trade day, you're not going to wake up tomorrow with 5,000 bushels of soybeans at your door. No, you're going to be liquidated for cash. The majority of futures market participants, 99.9% of you guys, are going to settle in cash, regardless of what type of futures contract you are trading. If you have not set up and established the hedging paperwork ahead of time, you are not going to take delivery on jack. Okay? Please understand that. For those individuals who are participating in the futures market to take delivery on stuff, that's a whole different ball game, a whole ball of wax, and a lot of money is transpiring hands. You better believe that. You better believe that. Money is exchanging hands. They're going to charge you interest and storage fees for holding and housing your supply, and delivery fees. All right? There's a lot of money involved, man. This ain't no small change. All right? We're talking a lot of money. So the only way something like that would happen is if they had, let's say, 1,000 accounts that are hedge accounts that are going to be taking delivery, and the stuff is already set aside for them, and then all of a sudden the information is not in the warehouse. What you mean that gold? We supposed to have, let's say supposed to have like 1 million tons of gold in the storage facility, so that the 1,000 accounts can take delivery. And when the delivery day comes, there's only one bar of tungsten on the floor. Okay, now we got fraud. Now we got FBI inquiry, CFTC inquiry. Someone's going to jail. All right, someone's going to prison for a very, very long time in a situation like that. That is the only way you can have quote unquote collapse at the COMEX, is if someone physically robs the storage facility. That's that. Then now you have a problem, because now you can't make delivery because you don't have the physical. All right. I've never known or heard of a situation where someone could not take delivery. Never heard of that. And if it did happen, I'm sure there was some extenuating circumstance and that person was just settled out in cash, because that's always the method. Okay, we have something happened, warehouse caught fire, all the grain in there burnt up. We're going to go ahead and cash you out. You don't lose because they can't make delivery. You're still going to be cashed out. It's just how it goes. It's not now. It would only be all over the news, and it'd be fraud if they lost your physical. They can't make delivery on your physical, and they don't have the money to cash you out. Now we got history in the making. Now, okay. Now we got a problem. That is the only way that then I'll have to change my tune and say, okay, fine, everybody. Yes, COMEX collapsed. Okay, you heard the news, whatever. But in a situation like that, like I said, someone will be going to prison for an awful long time and faced with all types of fines, and it would be a fiasco. All right. Not saying that can't happen. Anything can happen, but the chances of that ever happening is slim to none. Have we had fraud in markets before? Yeah. I have to say, man, that John Corzine MF Global thing, that was shaky, man. That shook the market to its core. But again, it was fraud done at the broker level. They took client money. They took segregated account money. That was a bank robbery. But because John Corzine was attached to it, you never seen him go to prison. He didn't get in trouble. I mean, that was malfeasance, misappropriation of funds, manipulation, fraud, misrepresentation, commingling of funds. You name the banking regulation law that was broken, and they broke it. And the thing that made it so bad is they had already been in trouble with the CFTC and the NSA. NFA, sorry, National Futures Association. They've been in trouble and gotten fined and penalized prior to that. They were given all types of special considerations. Had that been any other brokerage, they would have been out of business on the second-hand slap. And that's real talk. That's real talk. They would have been gone. But because of who they were and who they were connected to, they allowed the shenanigans of MF Global to go on for years before the big John Corzine thing happened. So fraud has been a problem in American business going all the way back to John D. Rockefeller. You can make an argument that American business was built on fraud and deception. You could make an argument that every American corporation is a liar. Where do you think fine print came from? Read the fine print. American companies have been caught lying and deceiving consumers going way, way back. All right? So buyer beware. We live in a world now where, unfortunately, the government has been caught lying. The mainstream media has been caught lying. So you don't know who or what you can believe. You have to basically research everything that you hear. And that's exhausting. So now when you hear stuff, you just have to say, I'm sure there's more to the story than that. I'm sure that's not what happened at all. That's the world we live in today, ladies and gentlemen. So, oh, I see my brother in the room. What up, man? Thanks for the support, bro. Thanks. Can we drop down further in Bitcoin? Absolutely, yes, we can. Absolutely, yes, we can. To quote your boy Obama, yes, we can. Yes, we can. It's a market. I don't care what the market is. I don't care if the market is a staple of the economy. Can the price drop? Absolutely. Can prices go to levels that will make you want to pass out and faint from shock? Yeah. Yeah. Markets have tended to do that throughout time and space. Prices can go extremely low, just like prices can rise extremely high. Like the old saying goes, the market can remain irrational a lot longer than you can remain solvent. That's why you don't buck the trend, you don't fight the tape, you don't fight the Fed. Those are pearls of wisdom from market participants long ago. All right? A lot of wisdom in there. A lot of wisdom in there. And you would do well to heed it. So can Bitcoin go lower from here? Yeah, but it's a little long in the tooth. We're going on 2 weeks of hitting these lows. And I think we just hit a new low last night. Nope, wasn't a new low, but it was still a low nonetheless. We hit a new low 3 trading sessions ago, like Friday. I want to say we hit it like Friday. That's when we hit that low. I think we got down to like the 47 handle. This morning, the low, I think, is, well, actually, no, the Bitcoin futures hit it, had to make up for it. But the cash market, I think the low is what, 49? Let me just double check. I think the overnight low is 49 on the Bitcoin. I'm pulling it up now. Let's see what we got. I think it's 49. Okay, nope. On the cash, on Qcoin, we got down to 48,832. So we did break that 49. All right, we got there. All right, but I was right. We almost broke into the 46 handle on Sunday night. No, was that Sunday? Nope. Yeah, Sunday. Sunday go into tonight. Yeah, we sure did. So yeah, man. And that is a bearish pointer. Yeah. Yeah, we possibly could go lower, man. This could be a dead cat bounce. Bitcoin is volatile as a heck. It's a roller coaster. I told you, it's up there with the S&P 500, crude oil, and soybeans. Those 3 markets can hurt your feelings. They can hurt you. They can hurt you bad. If you can last long enough in these markets, as long as I have, you will live long enough to tell the tales of your own. You'll see the market disrespect you. The market is very disrespectful. The market is ratchet. The market is a ratchet chick, a ratchet ghetto bunny. All right, with no home training. All right, you can't take her out in public. She will embarrass you. And if you hang with her long enough, she will disrespect you. All right. Crude oil can hem you up for 10 points on a single trade. It happened to me. If you're not careful. It happened to me long ago. And I learned from that mistake, and I say I'm never going to repeat it, and I haven't. Thank God. But yes, if you're not careful, crude oil can jam you up for 10 points. It's a $10 move, by the way. Soybeans can hem you up with staying in a perpetual lock limit situation where you lock limit for several days and you can't get out of the market. You short and the market's lock limit up for the next 3, 4, 5 days. Or it can treat you like pork bellies. Pork bellies went lock limit up for the entire summer of 2008. Can you imagine, even if you were just short one pork belly futures contract, for it to go lock limit on you every day for the entire summer, costing you at minimum $1,500 a day for the entire summer? And the average person who traded pork bellies back then was, 10 contracts deep at a time. Can you imagine the economic devastation? That's why you got to be careful. When you trade in futures, make sure you know what you're trading. If you're trading a market that has a lock limit, you got to be careful. You don't want to be on the wrong side of that market. And hopefully, if you do, it has a futures market where you can go in. I said future, an options market where you can go in and buy puts and calls and do what you got to do to protect yourself, hedge yourself. But if not, then you just have to grin and bear it and hope you can get out. So that's why you don't overtrade. And that's why you don't abuse leverage. You never abuse your margin if you're trading equities, and you don't want to abuse leverage when you're trading futures and forex and you're trading crypto. Don't ever abuse your leverage. Always leave yourself an exit and leave yourself some room for an exit, because you might have to make a dramatic exit. And if you use all of your margin, if you use all of your leverage, then you are just a sitting duck, and all the market has to do is snipe you. Today could be that day where it decides, you know what? I feel like I want to lock limit today. There's no news. There's no good purpose or reason, but I just think I want to lock limit so I can hurt Joe. I just want to hurt Joe's feelings. He's been trading with me now for about 6 months, and I haven't hurt his feelings yet. Let me do something disrespectful to him today. You got to remember that the market is always looking to do the most disrespectful thing it can to you when you're not thinking about it, when you are not trading with wisdom. All right? That's when the ratchet market will disrespect you the most. Straight up sun you. All right? You don't want that. That's why we use stops when we trade. I don't care how big your account is. I don't care if you have $1 billion futures trading account and you're trading one lot. You're trading one lot of corn futures. I don't care. You always use stops. Just when you least expect it, the market can never do that. It will never do that. It will do that. I know people say, oh, man, the market can never move that many points. That's never happened ever. Wrong. Remember that forex video I did for y'all? Remember that one exotic forex pair that moved 55,000 pips in a matter of minutes? Do you remember that? Don't you ever say what the market can't do. That was unheard. No market ever in the history of humanity ever moved 55,000 points in a matter of minutes. Look how long it took Bitcoin to hit 55,000. Well, imagine if it moved 55,000 points right now while I'm talking to you. How many people do you think that would bankrupt who will be on the wrong side of that move? Unless you were long that move, you would be economically devastated. But if you were long that move, you would be wealthier beyond your wildest dreams, and you would be high-fiving everybody and all that good stuff. Drinks on me, So just remember that. Always have a healthy respect for the market. You never want to have a fear of the market. Scared money don't make money. All right. I remember that scene from Belly. He was like, "Don't we bring me?" The Jamaican dude was like, "Don't bring me no scared business," because he saw that as a curse. So don't you talk no scared business around me. All right. Scared money don't make money. So don't be scared of the market. Can't be scared. You just have to have a healthy respect for it. Just like you do the ocean for you deep sea fishermen out there, or deep sea divers, or them seamen. You have a respect for the ocean. You respect the ocean. You don't fear the ocean, but you respect it, right? Or you outdoorsmen who like to go on these journeys into the jungles and wildernesses and hikes and climb mountains and stuff. You have a respect for the nature that you're going into, right? You're not scared because you wouldn't do it. And you're not disrespectful because you may not come back. So you got to have respect for it. And that's all I'm saying here. So what does that mean? It means I believe that the U.S. government has lost respect for its people. It's lost respect for the economy. It's doing crazier and crazier things. They're not even blushing when they say these wild things out of their mouths. Let's tax the rich. Let's tax the rich. If you make over this amount of money, you don't need all that money. Let the government come take it. And the people are cheering for it. Those who don't find themselves in that tax bracket are perfectly fine with it. You idiot. How can you ever be fine with the government confiscating someone else's property that they worked hard for? So you mean to tell me that if I work my fingers to the bone, creating a product or service that is superior in my industry, backed up by outstanding customer service and competitive pricing to the point where it leaves me with the logical conclusion and consequence for doing so is that I'm going to make a ridiculous amount of money and help many, many people, then now, as a reward for that, the government's going to come in and take all my money because they're going to say, no man should make that much money. No man needs to make all that money. What are you going to do with that much money? That's basically what you're saying. You're giving the government carte blanche to become tyrannical, and now that makes everyone else a serf or a peasant, where the government has the right to come and take from you whatever it wants. That means you lose the right to personal and private property, because now you're saying all property belongs to the king. I don't think so. I don't think so. People who make a lot of money are being rewarded for working hard. You do not get to take that away from them. Take from the rich and give it to the poor. I don't think so. So how would you like it if when you go to work and you work your 2 weeks and you get your paycheck, the minute you step outside to the parking lot, somebody punches you in the face and takes your money? Or better yet, you go to the bank to withdraw funds and someone's waiting for you outside the bank. As soon as you come out the bank, they clobber you over the head with a lead pipe and take your money. The money you worked hard to earn, someone else gets to come and just take it. And then they get to say to you in court, you don't need all that money. What you going to do with that much money? Who are you to define what is too much money for somebody? Those of you that work, minimum wage jobs that make maybe, if you're lucky, $200-300 a week. What if someone declares that's too much money for you? That's too much money to be making. What are you going to do? You don't need $200-300 a week. What you going to do with $200-300 a week? Smoke it up in weed? I don't think so. Nope. Mr. Government's going to go ahead and take half of that. Anyone who makes more than $200-300 a week, the government's going to tax it at 100%. Give it to me. You don't need it. That's basically what you're saying. That's the logical conclusion that you can come to when you say tax the rich, take all the money from the rich. They don't need it. Ladies and gentlemen, we cannot lose personal and private property rights. And your money is your personal private property. You earned it. The government does not get to come and take it away from you. No one gets to come and take it away from you. You earned it. We should never legislate theft, because that is what you are saying you are agreeing to. You're agreeing with the government that they can go ahead and legislate theft. Make theft legal as long as the government is the one doing the stealing. You're now saying that theft is legal. Ladies and gentlemen, please wake up, wisen up to what is going on. Don't fall for it because you think it doesn't affect you today. But let me tell you something. What doesn't affect you today will definitely affect you tomorrow. Don't ever forget that. Don't ever forget that. We're together in this. All right? Either we stand together or we fall separately. The American people need to wisen up and know that they're being gamed. Okay? You're being played. You're being played here. Don't fall for it. Don't fall for the okey doke. All right? Don't fall for it. Don't fall for the okey dokey wan chokey. Do something. Okay? Think about it. It is what it is. Okay? Please remember that. Always remember that. All right? So, with that being said, do you have any questions on why they see cryptocurrency as a threat to their system? Now, Burks, you make a good point. For those listening, he writes in the live stream. He says, "They print it, thus they own it. You are just a user. Do not use government currency, then you can claim it is sovereign." That is a good point. That's why they hate Bitcoin. That's why they hate cryptocurrency, because their seal, their government seal, is not on it. They do not own it. So what's to stop me from saying, I refuse to work for dollars anymore. I demand to be paid in Bitcoin. I demand to be paid in Ethereum. I demand to be paid in Litecoin. I demand to be paid in Dogecoin. I demand to be paid in Theta. I demand to be paid in DOT. See what I'm saying? Now we got a problem. The moment everybody starts shifting to that and singing that tune, that's when they're going to have a real problem. That's when they're going to have a real problem. All right? That's why personal, private property rights are so important. Property rights are so important. All right? You're right. Fiat currency has their seal on it. Has their face on it. That's theirs. But again, I can say I don't want it. I can say I want to be paid in gold. I want to be paid in silver. I want to be paid in corn. I want to be paid in soybeans. As a person that is engaging in commerce, you have a right to say what you will and will not accept as payment tender, as legal tender. I don't have to work for dollars. You call the plumber. He shows up. He says, "Okay, look at here. I don't take credit cards. I don't take American Express or Visa or MasterCard. I don't take cash. All right. I want to be paid in Bitcoin." Or he may say, "Forget all that. I want to be paid in English muffins, or corn muffins, or blueberry muffins, or apple pie, or sweet potato pie." He can say whatever he wants. And either you agree to those terms or you don't, but he does have the right to decide how he wants to be paid. You dig what I'm saying? People barter all the time. They've been bartering for thousands of years. So people could start bartering for the things that they need and want and use dollars less and less. We watched this movie last night. What was the name of that movie, babe? I can't remember it. Time to Hunt. We watched it on Netflix. That movie, I recommend Time to Hunt on Netflix. You gotta watch it. That movie, I believed, was very prophetic, very on point. And it showed you a world in which fiat currency had failed and that no one was using fiat anymore. It was worthless. You need to see that movie. The movie it's very eye-opening. So just remember, folks, this is not going away. It's not over. The game is not over yet. But you do need to be aware of what inning we are in. And I'm here to tell you this is the ninth inning. All right, this is the top of the ninth. All right, it's the top of the ninth. Things are escalating rapidly. Please be aware of your surroundings and where we are. Okay? Take note of it. It's important. It really is. This is probably more important now than it's ever been before. It is so important. So important. So understand it. Understand where we are. Understand where we've been. And understand where we are going, where we are headed as a society. And it's not a good place. It is not a good look. I'm here to tell you that now. It ain't a good look. Where we are and where we are headed is not a good look. Not at all. Not hardly. So if that's the case, if it doesn't look good, if the outlook on the horizon is not good, then that means it's the opposite of good. So what are you to do about it? How are you to play this? That's what I'm saying. You got to play it. You can't say, well, I'm going to be Sweden. You don't get to do that. You can't be Sweden or Switzerland. There's no neutrality. You're going to have to pick a side. And either you're on the side of right or you're on the side of wrong. So you don't get to have it both ways. So either you are for free markets or you're not. You're either for freedom or you're for fascism. There is no in between. It's either freedom or fascism. And that's where we're headed. We have been diverging from freedom. We've diverged from freedom a long time ago. And we're headed toward fascism. All right. With that being said, I look forward to tonight's end of day report when we get into these charts. These algo charts, I'm sure, are going to have some very interesting things on them to show us. So I'm looking really forward to that. In the meantime, you can come visit us at PulseWaveTrading.com. Learn how we do this. All right, it's very, very easy. If you can read, if you can write, if you can pay attention, if you can watch a video and pay attention, if you have the ability to learn, then you have the ability to trade and build an income stream for yourself, aside from whatever else you got going on at the moment. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.